What's up, traders? Welcome to the Day Trading Show. So today we've got a home team episode. It's me, Tom, and James. We are talking about AI, artificial intelligence, and how it's going to influence us as day traders. And we talk a little bit about how it's going to influence our daily lives. It's already been influencing our daily lives. It's just going to get a lot more involved in what we do, from waking up in the morning to going to sleep at night. So we cover a lot here. We actually talk about in the beginning of the episode a lesson that we pulled from the Black Shirt Club today. So there's a little trading nugget there in the beginning, and then we go into more of the AI conversation in the second half of the episode. So enough out of me. Enjoy the episode. Make sure you're subscribed. We're dropping 2 episodes per week. We don't want you to miss anything. All of our important announcements are going to be found here on the podcast. So stay tuned, subscribe, and enjoy the episode. So, boys, I wanted to tell you really quick. Something happened this morning in the Black Shirt Club chat. I figured it would be good to share with you two and also with the podcast audience. So, every morning we're trading with the Black Shirt Club members and we're doing our thing. This morning it was a little light. It's a Monday. It was during the New York session. It was after the open. It was after my ASFX TV stream. And it was me, Tyler, and Colin, really the 3 of us speaking. Tyler was just on the podcast, so everyone listening knows Tyler now. He had 2 trades today, 2 losses. So, Tom, you read his weekly report card. I saw you commented on it. He was coming out swinging this week. He really wanted to hit some trades and see what he could do, executing on some of these ideas that he marks up, doesn't take, and they end up working out for him, right? So he takes these 2 trades. It was a GN short and an EA short. GN first trade, good trade, not a bad trade at all. Definitely reasonable. C setup, but reasonable. We agreed it was a C grade. There was a couple of things wrong with it. Reasonable trade, stops him out. He takes the full stop. Second trade, EA. He takes the short, also a C grade setup, but better. The structure on it was better. And it was also the same pair that Evan made money on Friday on his stream. So EA still moving short from Friday into today. Tyler takes the trade. It pulls back to the 50 EMA against him. Breaks the 50 with 1 bar, slightly small bar, and then comes back down. And when it broke the 50, he pulled the full position. So hadn't even fully shifted up yet, I'm pretty sure. Might have looked like it was about to. And he takes the full position off. Of course, EA is down 0.75% today. Way down, big time down through ADR, right? And he didn't get back in. Even he didn't get back in when I was talking with him in the chat, and I said, Tyler, this A2 is still in play. It was at the A2 entry price just 45 minutes later after the pullback. I said, bro, get in now, put the stop loss. It's the same trade. It hasn't left yet. So we started to talk about this, and, he was a little frustrated, of course, as anybody listening would be after 2 losses. And then seeing the pair start to move in his favor, even worse, right? That's really frustrating. So we said, look, 2 things, and this is what I wanted to share with you guys. 1, I said to him, you can't be too hard on yourself when you take good signals and you lose. It's not a place for successful traders, and I'm sure you guys would agree with that, right? If you take good trades and you lose, you got to take it. Like, that is part of being good at trading. So I said that to him, and then I said, where you can be tough on yourself, and this is one of the main reasons I'm sharing this with you guys, is I said, where you can be tough on yourself is repeating trading mistakes. Okay, today we say you pulled EA too soon. In his daily report card, he definitely will mark that. If we have that happen, I said to him, bro, it's a mistake. You're a human. You're going to make these. Like, it's a part of the game. Accept it. Let's learn from it. If you're not getting back in right now, move off for the day. Go take a break. Come back. Let's learn from it and not repeat it. That's what I said. I said, only be pissed at yourself if you repeat the mistake. And he agreed with me, and he appreciated, I think, that I said that to him. And then we went to just talk a little bit more about why not get back in after the mistake. And this is kind of what'll kick off our conversation as we go into the AI and everything like that. But he pulls himself out of the trade early and he doesn't get back in. So let's just talk for a second. How do you guys think we can help him and other traders who fall for the same thing? They get out too soon and they don't get back in. How can you work through that? Because that's what me and him were really trying to pick apart this morning. Tom, you want to take a whack at that first?
So I can do. So I've reached out to Tyler and I pulled him to one side and we jumped on a call after he messaged to say that he took 2 losers this morning. So I'm fully aware of what happened.
Okay.
And jumped on a call with him and had a very similar conversation that you've just described with him as well. And The one, in terms of answering the question, how do you get back in? I think that comes with experience, first of all. I think it's tough, especially after coming off the back of 2 losses. I think that's extremely tough. So I think that's definitely something that he will have to work up to if the trade is in play. The trade was definitely still in play. So I think there is a reason for him to get back in, especially if he's sat on a call with a couple of coaches and saying, look, this is still valid. Take the entry again. But in regards to the mistake of closing a candle mid-bar or closing the entry mid-bar.
I forgot to say that. Yes, he did get out of the trade to mid-bar, which was even worse.
Yeah, because when you look back at the trade, it never does shift up, and it ends up going to ADR 4R.
Right.
So we have spoke about this with Tyler already, but this is where trading can just get in the way, and your own psychology can get in the way, because you get a perfect setup for what he's been studying, the way he's been looking at these zones, and he's like, yes, I woulda, shoulda, coulda done this, and looking back, and then when he actually does it, he still ends up trying to find a way to get in his own way. But what I said to him was, and I think this is a really telling point, is the fact that he's just taken trades is progress for Tyler. Because if you think back to December and January, his biggest issue was not actually acting on his ideas. Whereas we have to remember that he has moved forward as a trader because he's now actually taking trades. And you're talking about not making the same mistake twice. I feel like he is growing because now he's in them trades. We now get to the next level, which is we find more errors. And this is what trading is all about, especially with newer traders and people that are trying to find their edge and find all the flaws that may be hiding deep beneath the surface. They start to appear at different times within your journey. And this is just the next step for Tyler. He's now taking trades. So now we uncover exiting trades mid-candle example. So now we put something in place, non-negotiable. You cannot exit mid-candle. Fine. Don't make that same mistake. We learn on, we move on. And then you'll probably end up taking profits early next time. So then we try and fix that problem. And it's just that continuous cycle of finding something, improving it, going again. And we have to remember that Tyler has progressed, and that's good. We're never going to take him from a break-even trader to making 100% in a year in the space of a month. This takes years. And this is just the next step on the journey for Tyler.
So do you think some mistakes are easier to fix than others? Because I would say to him, like, this mistake of closing mid-bar or getting out against the rules, really like getting out in a way of like just pulling yourself out of the trade. This is an easy mistake in my mind to not repeat, because it's like, okay, bro, don't close mid-bar. And again, not to Tyler, because I think Tyler is going to grow. He already is a good trader. I think he's going to grow into a great trader. But this is where some people might have to say, trading is not for me, right? If they continue to repeat simple mistakes like this is where you might have to look for a different career. But do you think some of these mistakes are easier to get rid of than others? Because I think some are.
I definitely think some are easier to get rid of than others.
Right.
Yeah, some are going to take you many, many times to get over, and making the same mistake over and over and over again. I think the idea is that what we should be trying to do is make them mistakes further and further apart,
right,
and each time less and less damaging, because some of these are going to be habits that have been ingrained in your personality for as long as you've lived, and that is hard to just snap out of.
Yeah,
that is a process that can take time.
Agreed. Definitely.
What about you, James? You think of anything on that?
Yeah, so the first thing I wanted to say was, this is for Tyler, just to make it a little bit more lighthearted, but Tom Dante tweeted this on Friday, and he said, only 3 things in life are guaranteed: death, taxes, and the third setup that you don't take off, having 2 losses in a row will be a win. So obviously, inevitably, the one that he doesn't take or doesn't get back in, the third trade after 2 losses, is going to fall 4R through ADR. So yeah, just obviously that's why trading, and Tom was saying, trading is so tough. On to about trading mistakes, and that as Tom was saying, like, once you fix one mistake, something will come up in your trading. And I think that's the beauty of trading, is that you can never master trading. You never become, that's why I think consistently profitable traders, you don't all of a sudden become profitable and you stop making silly mistakes. Like even Crudeli, I mean, Crudeli's made millions of dollars trading, right, in his lifetime, and he still says that he makes mistakes. Even Tom Dante, who's been a prop trader for 24 years, still says that I think there was this one tweet that that he said, he's like, most of you, this is the difference between you and most of you think that you're one judgment call away from being a hero. I know I'm one judgment call away from being a cunt. And and it's so true. It's like he knows that he can stuff up at any minute, and he just tries to reel himself in. And I think it's just about continuous improvement, the Kaizen philosophy, right? That's why Tom calls himself the Kaizen trader. You have to continually improve.
Yeah. You want to add anything, Tom?
Yeah, it was. I'm just going to relate it back to golf, on what James has spoke about. How often, obviously, you play golf, and a lot of the people listening will probably play golf or know about golf. How often is it when you play, you work on something really, really hard, like you work on your driving, you might work on your chipping, you might work on your putting, and you finally get that sorted. And as soon as you get something sorted, something else falls away because you've neglected that in practice. And it's just that constant circle, like you say, of fixing one thing and moving on to the other. It's like, again, doing up a house or a property. If you live in a house, like you start by doing one room, and then you do that up, and then you go and do the next one up, and the next one, and then by the time you've done the first, you finish, you've got to do the first one all over again.
Yep.
It is an interesting thing how the trading errors have never stopped for so many traders, like James mentioned, whether they're older guys that have been in the game 5 times, sometimes as long as I have, or if you're even newer than me. I'm only on my about 7th year. So it's like these mistakes, if they aren't going to go anywhere, what Tom said about keeping them far apart and keeping them cost you as little as possible, those should be the 2 areas of focus. And I think that goes back to my point about what I said to Tyler. Just don't repeat the mistakes, bro. If every week you look at the previous day and you're looking at the last trading session, because you're only as good as your last trading session, you look back at that and you try your best to not repeat a mistake that you've made in the last 5 days. If you do that every week, you're going to really grow, I think, a lot over the course of 12 months. Like Tom said, it does not just happen in a month. So good stuff there, boys. Good stuff. I knew that would be a little valuable nugget to start the episode with. So today we are talking about AI, artificial intelligence. How is it going to influence trading? So Tom said before we start the episode, he wants, and it's a good point, he wanted to make it very clear that we don't want to come off like we're trying to be experts on this topic. We did some research. We have some ideas that we want to share, but we are not AI experts. And we don't want to make it seem like that. And we also don't want to make it seem like AI is a new thing. This chat GBT thing is a new thing for a lot of people, but AI has been involved, artificial intelligence has been involved in trading for a long time. I said to James, like, you're using a trade copier. That's a form of AI. It's very simple. It's very basic, but that's a form in a way of AI. It's more software than AI, but still that kind of using computers to either work smarter, faster, work harder, cover more ground than a human could. That idea has been executed in many different ways. But I think today, instead of talking about how it's been used, we're going to talk about what is it going to do for trading going forward. And I think what we said before the podcast, before we started, we all agreed that automation and artificial intelligence are coming faster than ever, and in many more industries other than just trading. I was telling the boys a couple of weeks ago when I was in Europe, you walk into the McDonald's, and now it's like McDonald's like that everywhere. There's no humans except behind the counter serving the food. I walked in there to use the bathroom. All it is touch screens everywhere. Everywhere. It's touch screens. You just order, and then the human gets the bag that the machine probably put everything in, and then it hands you the bag. So there's automation everywhere. But again, we're going to focus in today on how is it possibly going to make an impact on trading. So if you enjoy the conversation today, chime in with us, because I'm sure there's some of you that clicked on this and that are listening this far, and you're going to listen all the way through, I'm sure, that know something that we don't know about AI, and we want to hear about it. So please, on YouTube, drop a comment. If you're watching, if you're listening, hit us up on Instagram, Discord, whatever, get in the conversation with us, because I don't think this is a one and done kind of conversation, right, guys? This is probably going to be something that has to keep coming up for us because of where we're going. So let's talk about some of these important ideas or important like focal points of how AI could influence trading. One of the main areas that we have to talk about, like I mentioned, is the Forex copier, some type of automated trading. So the Forex copier that James is using, the trading copier, James takes the main trade, but it is copied to multiple accounts. In the sense of like AI taking over that, we would have to look more like an expert advisor kind of thing for MetaTrader 4, some type of EA that is actually taking the trades, reading the market and taking the trades. So I'll pass it to James first. Do you think that this is something that's coming in the next 5 years, in the next year, in the next 10 years, from your experience and from what you see, because you have a lot of followers on Twitter? I know you talk with a lot of people. Do you think we will be doing automated trading soon? What are your thoughts on automated trading specifically?
Yeah. So obviously, as you say, I've already been using the copier, which I think is a big benefit because you can diversify your risk over different accounts, and it is really, really nice. I think with regards to obviously AI and that sort of thing, as you said, it's already been used, but I think it's been used more in like the hedge fund space, not really as much in the retail space. So I've got Amanda, my girlfriend's cousin. Her fiance actually works for a hedge fund. I won't name the company, but a very, very big hedge fund somewhere in the UK. And what his job is actually to monitor the EAs, whatever you want to call them, the bots that are actually trading the capital for them. So he's an executioner. That's his job. Wow. So all he does, and he's managing billions of pounds that are going through that. His job is to make sure that the bots are running how they're supposed to be run.
Right.
Now, so obviously that's at a big hedge fund level. When it comes to retail trading, I definitely think that we will possibly. I know Jerome's been coding some of his own stuff with regards to that scalping system that he was using, right, with the shark fin.
Yeah,
I definitely think that in the next couple of years, we could be looking at coding and doing those things. And with the help of like ChatGPT, we might not even be able to code it. We have to code it ourselves. Tom will be able to, he's smart enough, but me and you, the dummies, will have to get that ChatGPT to help us, right? So I definitely think that it is here. And it probably is going to become more prominent, and definitely, I'd say in the next year, especially with this ChatGPT coming out.
Yeah.
But I do want to put something out there with regards to newer traders. You're always going to get a message from like someone on Instagram or something saying, "Oh, this forex bot is can trade for you and make 9% a day or whatever." Be very careful of those. I would only do something that I have formally been involved in the making of. Like if it's trading my system that I know what is doing it, that's a nice thing for diversification. I think if you're trading, let's say, for example, we want to automate the A2 system, right? And I want to have my manual trades, do my manual trading, and then allocate some capital to doing automative trading. That's how you can diversify the risk and be like, okay, this capital is just for bot trading, and this one's for my manual trading. I think that is probably a good way to diversify, but you have to do it yourself. I don't think trusting anybody else in the space is going to be a bit of a tough one.
Yeah, I would agree with that. I've never met somebody that's like killing it off of a Forex copying robot. You know what I'm saying? You see a lot of ads for it. I get ads all the time. It's like, use our EA to pass your funding challenge. I've never seen anyone or heard anyone doing that. Everyone that I know that gets funded and stays funded is manually trading still. That's just what I've seen. And I think some of these firms don't even allow bots. You know, they want you to do manual trading still. But what were you going to say, Tom?
I was going to say, if you did have an EA that was really effective in the markets, would you want to produce it to the masses?
Probably not.
Now
or do you want to hold it to yourself?
Good question. James?
Yeah. Personally, if I could code like that, probably not. I'd probably share it with maybe
no way.
I'd probably share it with you two, and that's all.
You wouldn't, bro. I'm telling you, no, you wouldn't. If you figured out an EA, some type of bot that guaranteed almost like a 99% guaranteed that it could return 100% a year, you would not share that. Dude, I would say some of these hedge funds, they would take if they could get a bot that guarantees 20% a year, they wouldn't tell you.
What's the difference between that and some of these commercial companies patenting ideas and patenting algorithms and things like that, and literally making it illegal for people to copy things? What's the difference between that and an algorithm traded in an EA? Patenting that.
What? Bro, that thought has not even come into my mind, that people are patenting patterns. Say that 10 times fast. Yeah, I haven't even thought of that. So what? People are like saying this bearish triangle is my triangle.
Well, no, like maybe. But
that's what I thought. Like, what do you mean?
At EAs that can genuinely stand the test of time and things like that. Some of these hedge funds would be keeping these under lock and
that
key.
makes sense. Dude, when I worked for the company that I worked for in New York, I told you they had a room and there was people in there that we were not allowed to talk to or go into. We couldn't go in there, and that was where they were running the bots for sure. And they were people that were way smarter than us, like James said, and like way smarter than all three of us put together, probably. So it is interesting. Even, I mean, James brought this up, so we should talk about this. Even with having these robots, you still need smart people to execute and oversee the robots. Do we think that will be the way forever? No, it can't be. Not forever. You will not. Eventually the computers will be smarter than the humans to oversee the other computers that are running the software, running the program. Right?
I think so, but let me tell you a story about what. So obviously, I got.
Tell me a story.
So they came to visit in December, right? Amanda's cousin,
and the executioner. Call him the executioner. I like when you call him
the executioner. Yeah, the executioner. We'll call him the executioner for purpose sake. So he actually told me a couple of stories, but what happens in the hedge fund game when they have these bots, right? Is that the hedge funds are always trying to one-up each other. So it's like a constant battle. They improve here, and then this one improves here, and then they start beating this hedge fund, and they need to improve this hedge fund because then the bot kind of loses its edge. Exactly. And I don't think you could ever replace that. Humans are always going to be able to be better because we're better at emotions, right? Than a computer.
That's an argument. That's an argument right there.
Exactly. So when it comes to executioning, we can always be better at, because we know what the other hedge fund's thinking, and the computer won't know how to do that. We need to outsmart them. But that's how you beat them at the game.
But that's I get what you're saying. But what if the AI eventually is so smart that it knows this XYZ hedge fund is going to do this when this market does this? When the market turns and goes down, their hedge fund is going to 99% probability that their hedge fund does this as a reaction. We will then do this as a reaction. Like bro, I'm telling you, I feel like we don't understand how smart these computers are going to get. That's just my opinion. Yeah, so I don't know. I'm definitely in the boat that there could be a place in the future where we don't need humans to trade at all. You can still do it, but I don't know if it will be needed. You know what I'm saying? Tom, what do you think? Do we need the executioner, or will he eventually or will the executor be executed?
I get lost trying to think what the future looks like in 50 years for my kid. Like, in 50 years, what is the world going to look like? And I honestly cannot compute what it even looks like. So what does that look like in trading? I'm not too sure. If I saw like rainbow highways in the sky, like you see on Mario Kart and stuff like that, I wouldn't be surprised, I don't think. But in regards to the trading, I think humans at the minute are required because artificial intelligence and the robots and the algorithms can't see context and some of the things that are going on around. So like the COVID crash and oil going to -30, like data will price that all in, but it doesn't know why, and it doesn't know whether to include it or exclude it because it's such a rare event, and it'll just include it, and then it over optimizes and can take its edge away when really it should probably just be disregarding the event because it's such a rare event. So I think at the moment humans are still required because we need to know what the algorithm should still produce as an end result, and that's one of the big things at the minute. It's all very well and good being really good on a spreadsheet or in Python or all these databases, but if you don't know what the actual outcome should kind of look like, you don't know whether the computer's made the right decision or not. So at the minute, I think the humans are required. Yeah. But as time progresses, that is becoming less and less of a necessity.
Right.
And look at all the automation in the world at the minute. So like we just spoke about McDonald's and Amazon and or like Tesla. They are getting rid of the workforce because they are making AI and these computers and machine learning and all of this able to make better decisions over the longer term, and I think that will increase more and more. But I do think for now, humans are still required.
Yeah, I would agree with that. I look at it like the AI is like the cell phones. Cell phones used to be really expensive and hard to make. Now they're not. And I would look at it like even more better example would be TVs. TVs used to be really expensive and now they're not. I think the AI exists to do exactly what you're saying. It's already out there. Someone with a lot of money and resources already is using it. The rest of us don't have enough money and resources to get access to it, just like TVs used to be, just like technology has always started out expensive when it's rare and new, and then it gets cheap over time and becomes available to everybody. So it will eventually come down to us, and then it will be a much harder question to answer if the humans will be necessary. You know what I'm saying?
Yeah, and I think we're sort of in that transition period at the minute. It's kind of like,
Great.
I see it as like a rising of the tide.
Yep.
And everybody is now being brought into this through, like you say, ChatGPT and OpenAI and all of these other ones that are out there at the minute, that previously, like when we look from a trading perspective, like your Goldman Sachs and your people like that have always going to have attracted the best mathematicians and the statisticians, whereas now other lower tier banks are able to get people with a similar sort of skill level, or people that have never been on the radar because they didn't go to Harvard University, but they sat in their basement for 15 years practicing code. And this is now available to them sort of people that, like you say, haven't gone and got that degree and gone through jumping through all of the hoops that these people want to see, but everybody is now getting access to it. And because of that, the talent pool is getting wider. So more people can use it and utilize this in their day-to-day life, and not just the top tier banks and hedge funds.
Yep. AI will most likely make costs lower, even though AI costs money to purchase and use and run right now. Because if you think about it, right, like all of the things that we could name and that we have in our notes here for today's episode, all of them really just feed to, I think, at least one outcome, which is lower costs for us. You're going to have, like, let's say you're running the hedge fund, like James is the executioner. He's, bro, you got to show him this episode. So he's like, oh, why are they calling me the executioner?
I will show him.
Think about how many people they could fire if they had really good AI. Look at Microsoft. They laid off 10,000 employees, I'm pretty sure, and they just invested 10 billion into ChatGPT over the next few years. So they're investing into AI and cutting the human workforce, which goes back to the McDonald's thing, but lower costs overall to the end user. When you're thinking about the guy running the hedge fund, to fire people will be cheaper than keeping them on staff if the AI can do their job. So you look, I mean, and like I said, it all comes back to money. It always will come back while humans are involved to reducing costs. AI could help you with risk management. It could help you with gathering new data. It could help you, predict future market moves, predict the next black swan, whatever. It will improve accuracy, all of these things. But all of that at the end of the day will just lower costs for the people that are involved, that purchase the AI and use it. And lower costs mean higher profit margins and more return at the end of the year when you're talking about trading, right? So what area do you guys think stands out the most there that I just named, that you're maybe, let's say, looking forward to using AI? Are you looking forward to being able to gather data faster, Tom? I'm sure. Are you looking forward to being able to predict the next black swan crazy market event? I know I am. That's what I would be most interested in. I would love to also be able to see, like, what are other strategies of risk management? Imagine if you could talk to ChatGPT and say, this is how I'm managing my trades. I'm taking 90% profit at 1R, locking my stop. Yeah. Tell me what my outcome would be if I would not take 90% off and I would move my stop to the next structure point, blah, blah, blah. And it could do it looking at your previous trades in a second and tell you how much better your trading could have been.
So I think we're not secretly, like, this is what we're gearing up to with the way that we gather data in the Black Shirt Club and via idea generations. All we have done by doing that is create a database.
Right.
And that's it. So then once we've got the database, we know exactly the date, the time, the entry, the price, the signal, how far it goes, how much we risk. We are then going to be able to, once we get enough data, feed that into some sort of machine or statistical model and say, what's the best? Based on my historical trades, how do I extract the most money by changing A, B, or C? Position size, my trade management, how do I reduce my drawdown? All of this is going to be available because we collect the data, and that's all AI is. It takes data in an input and puts it out as an output via a predictive model. And we do that way more than people already assume. So backtesting 47,000 trades. We've done a lot of that, and we optimize it through models and changing different things. So it's already being utilized. And I think it's then just now, because of these tools that are coming out, taking that to the next level. And again, the masses get available to that, so we can start to do this. Like, this is what these guys that have been extremely clever and have these supercomputers have been doing for years, but now everybody's sort of just catching up.
Yep.
And so my question to you though on this is,
Okay,
does that ever create a fully efficient market?
if it would be all
Because
AI,
markets
would it be
operate on
efficient?
inefficiencies.
Right. So you're saying if it was all AI, would the market explode because it would be so efficient?
Do we ever see an efficient market?
I don't know. Well, I think James, you've brought this up before too. So this is a common discussion. I think it really would have to be no humans at all, no retail, no hedge fund with humans pulling the trigger, all AI. Do we really think that that's going to happen? I don't know. I think you're more likely, like, that is a dramatic move from where we are right now. What are you more likely to see before that? And let's discuss this. Maybe one market that only is able to be traded with AI on the blockchain with some crypto or something like that, right? Wouldn't there be a middle step, Tom?
To a fully efficient market? I don't know, but I quite like that idea of maybe just an AI trading asset. That
Yes, that's what I'm saying. You can only get into this if you, right, you have to run a bot. It's bots only. What would that market of bots only, like, call it BOT-USD? What would it look like? It's interesting.
I don't know.
What would its price be?
You know, let's create it and find out.
Well, I guess because okay, if we're really thinking about this, you need an asset that is then being traded. You need gold to then
you need something, yeah.
So what would this pricing? Sure, it would be all bots, we're saying, on the trading side, but what would the price actually be of? A Bitcoin, some crypto? That's what I'm thinking. My brain would say the simplest answer is some new crypto coin that is valued at $1, and then it's all bots that trade it. And maybe it circulates around $1, and that's how it's an efficient market. Is it just trades from 99.99999 to 101.000001, and it just trades between micro pennies between that? I don't know.
Yeah,
I'm just spitballing now.
Yeah, I definitely wouldn't. Well, definitely wouldn't be Forex, because Forex will never be able to be fully efficient. It's just the biggest market in the world. People are holding cash on them.
Never say never.
At the bank.
They're going to use this video, bro. They're going to use this video and be like, I told you Nitro Bruce was wrong. Never say never.
Okay, well, I'll put out Forex market. I highly doubt. I'll put it. I highly doubt it will be, but maybe something like that.
But I think
like that. But then would that not be?
Yeah, it would screw up their. Think about how many businesses get rich off people losing money trading.
Yeah.
Why would they want to stop that, Tom? Now we're going down the rabbit hole. We know that the banks control everything. Let's not lie to ourselves. America especially is run by big corporations, which are in some cases these big banks. They have a lot of influence between the banks and BlackRock and companies like them that are asset managers. Why they pull the strings for these things because they have so much money involved. They have so much leverage on these people that do actually control them. So when you're at the top, why would you want to create an efficient market that would take away your profits? Just like, why doesn't Pfizer want to make, oh man, now we're going to get keyworded because I said the word Pfizer. The YouTube AI just heard that. We're going to get a COVID warning. But I'm saying, why would a pharmaceutical company want to actually cure you and get you off their pills that they make money from selling? You get what I'm saying? We as the retail traders are on the medicine, the crack that is the market. If they shut us out, how do they make money, Tom?
So, in regards to you, do they want an efficient market? I'm not sure you ever get an efficient market. What is efficient? Can anybody tell me what an efficient market is? I think there's always going to be a difference of opinion in one way, shape, or form, which is what can't create an efficient market if somebody disagrees with current price, and somebody's always going to disagree. If you were to have an AI only asset traded, you're going to create a bot or an AI that only takes long positions versus somebody that just only wants to take shorts and mean reversion stuff and things like that. So I think there's always going to be inefficiencies in every market. I don't think price is always going to fluctuate, I think, is where I'm getting at. So I think there will always be that, but I don't know whether it makes things harder from a profitability perspective in terms of broker costs and AI costs and all of the expenses that you're going to potentially have to do to make money later down the line. So whilst it may save us, you may have to, like you say, invest in supercomputers or other compute or data, buying data and things like that. And I think that's where the retail traders maybe could get squeezed out a little bit.
So I'm looking it up right now. It says the efficient market hypothesis argues that current prices reflect all existing available information, making them fairly valued as they are at present. Given these assumptions, outperforming the market by stock picking or market timing is highly unlikely unless you are an outlier who is either very lucky or very unlucky. That's what it says here. So then it goes into.
So it's like when we see like the big news events, we ask ourselves the question: is it priced in?
Right.
That's asking. We're asking: is the market efficient? Has this been priced in?
Right. I believe no way, not a shot. This says here, the efficient market hypothesis begins with Eugene Fama, of a University of Chicago professor and Nobel Prize winner, who is regarded as the father of modern finance. In 1970, Fama published his paper, which outlined his vision of this theory. 1970 markets, bro, way different than 2023, bro. That's almost 60 years ago, coming up in just a few years. So let's call it 50 years. We got way more reasons now, I think, than then. And I could be wrong, but I think way more reasons now than then to think the people, there's way more influence from powerful people that don't allow things like an efficient market to exist, bro. Maybe in 1970 when things were just different. Technology was not widely used. Technology was just in its infancy in 1970 when the idea of, markets are efficient. Everything's priced in. Yeah, bro, because everyone's reading a fucking newspaper. Now, no way. No way. Not just because you can buy people for, I think this is, again, I'm going in weird directions, pulling things, but I think morality being low, people are easy to be bought. People are easy to be then influenced. You can buy your way to influence nowadays. We know this. This is what lobbyists are. So it's like, no way. Well, efficient is, you're crazy, bro. No way.
Even with data way more available today than it was back then. So back in his day, what about if somebody had access to that information way before somebody else?
Right.
So and whereas now today, information, much more accessible today.
Right. Yeah. So I don't know if AI would be the thing that makes markets become rapidly efficient. You know what I mean? And again, I have a lot of hesitancy to feel like, why? They make so much money off people that lose money in trading, bro. Think about how much money the funding companies alone make off of shitty traders. Think about the companies that have people that throw in who knows how much money into their E-Trade and all these things, and they're just throwing money at these banks. You know what I mean? Why would they want to stop that? So I think it'll be really interesting to see how AI influences the retail trader, you know?
Well, just something on that note. What about, you see how this also gets influenced is, let's just say AI becomes available to everyone, right? On a large scale.
For like automated trading?
Yes.
Okay. And it makes good decisions and it's smart. You don't have to do nothing. It just knows how to trade.
Okay. Correct.
Okay.
So let's say that happens. Remember, it doesn't only influence brokerages and banks and that sort of thing and hedge funds. It also influences your wealth advisory companies, financial advisors. You wouldn't need a financial advisor then because you wouldn't need to give them the money to manage it for you because you'll just do it from your AI, from your bot.
Right.
And remember, those I'm talking about companies that like take a performance fee, like 2.5% of your capital for the year annually. Something, like a PSG or Wells, something like that. Those financial advisors,
like Vanguard. So imagine,
like,
are we saying we're going to think AI is going to put Vanguard, one of the second biggest asset managers in the world, trillions of dollars?
Well,
retail AI going to put that out of business? Is that what you're saying?
Well, because what I'm saying is, if this is the reason why those companies exist, because people are either too lazy or they don't have the time to learn, or they're just not interested in learning how to make money themselves from the stock market or whatever market they want to trade. So they give it to people to manage. Now, if you could just do that from a bot from your home, why would you give it to?
Why would you give it to that guy? No, it makes sense. But then that makes me think, okay, if we don't need Vanguard, we don't need BlackRock, everybody can manage their own money, and you don't need investment managers anymore, bro. The world would be exploding. We'd be in
That's what I'm saying. There's too much money on the line.
Is that not what crypto's meant to do?
If they let that happen, and then these companies lose control because they don't need the money, like people don't need to put their money there. People can have AI and program their own AI. We would be in the cyber apocalypse. We would emerge from the cyber apocalypse, and the machines would be in control. That's what that would be. You know what I'm saying? Because it would dismantle everything. You know, everything would come apart if everybody was using AI for like stuff like that. You know,
I don't think the Matrix would allow that.
Right. Tom, you were about to say something.
You were talking about everybody going on their own and not having to have any of these large funds and corporations. And is that not what Bitcoin's problem was meant to solve? And I think that's just led to more skepticism around that than ever.
That's what they say.
It's not where people foresee it to be.
Right.
And people lose trust in that. And therefore, I don't think they are going to want to trade their own money or manage their own money, because they see of all of these disaster stories that can happen in the financial world, like Bernie Madoff and somebody that's meant to be respected, robbing £60 billion off people. Is it any wonder that people are putting it under their mattress rather than putting it into funds? And the ones that are putting it into funds still know that there's going to be a risk. Do they want to be taking that on their own? I'm not sure.
I don't think so. One more point I want to say is just like to think about how AI could step in that situation. Even Tom, imagine you don't even need, and this is kind of what we're saying, you don't even need to think about somebody like Bernie Madoff to manage your money. You would just be able to do it yourself. Click a button and you would be able to do it, right? That's what we're saying. So in that progression of human evolution, wouldn't the machines then just be smart enough to make all the money if they wanted to? If we were just letting AI do all of our investment decisions, then the machines decide, you know what, we actually want to, be a part of human society. So we need some of the money. So then they start making money, right? I don't know how this goes, bro. It's weird. It's so crazy. There's so many weird. AI is weird because we are AI. We are discernment and emotion and logic and reasoning all in one. And we execute that every day. Judgment, reasoning, predictive analysis. We do this. We are AI. We are just a human form of AI. So now when you give the AI more AI, what does it do? Who knows, bro? Who knows? First of all, look at virtual reality as like a middle step, right? I feel like virtual reality is the middle step. What's the first thing everybody did with virtual reality? Porn. They were like, oh, I can watch porn in VR. Okay. That's what humans do. So you give everybody an AI that can invest for them, they're probably going to just look at like porn or something stupid because we're stupid monkeys. I think that there's that outcome too, where the machines are like, God, these humans are so stupid. Sports, porn, church, whatever. Like there's like 6 things that humans Google. We don't need them. And then the machines are like, yeah, we're doing the work. Humans are the slaves. Come on, we've seen Terminator. We know how this goes, boys. We know how this goes.
It is scary to think about it. It genuinely is. Like you shared a video, or I shared a video, and you said that you've seen it. And you shared it.
Yep.
That robot of
the
on the building site,
swinging things, throwing stuff, jumping, bro. I was like, this is crazy.
Like I say, I just don't know what our kids' future looks like.
Bro, that guy, that robot guy that could kick your ass and break your skull with one fist is also going to trade better than us in 15 years too.
Oh, yeah.
He's like,
and drive our cars better.
He'll drive the car better. He'll trade better. He'll do everything better. Why would we need you? What a dark note.
Why is my missus going to need me?
Right. Well, I was going to say, what a dark note to end our podcast on today, boys. But the AI is not all fun and games. Elon Musk has been talking for a long time about regulating AI. He's very concerned with no regulation in it. I would say that probably makes sense when you're talking about something that could be smarter than all of us.
Yes, I think it's a good point to like, what are some of the disadvantages of AI? Whilst we're just quickly wrapping up, I do like, what do you see as some of the disadvantages of it? Because we've just spoke about what it could be and what it could lead to.
Yeah, James mentioned the best one, the emotion. Like humans have this emotional component to them that machines haven't mastered yet, it seems like, but they will. I strongly disagree with the people that say humans will never be able to be replaced. No, they will. There's no way that humans are not replaceable. We are replaceable. And I think right now it's just emotion that separates the human, you know, IQ, EIQ, emotional intelligence.
Yeah, I would still argue that like humans would probably still be able to feel like raw emotion, like still better, like from a human to human perspective rather than from an AI.
You'll be arguing this. Bro, James is going to be arguing this with his robot butler in 50 years. He's going to be like, Jeeves,
you don't feel emotion.
You don't feel emotion. And it'll be like, yes, Master James, I do feel emotion. I feel all 742 emotions. Like, it's going to be like, what the fuck? You're going to be like, fuck you, Jeeves. I'm going to play golf. It's like, James, I'll play golf better than you.
And
James,
like,
I'll give you a golf
I can
lesson.
sense you're angry. I feel really upset now you're angry.
James, your skin temperature is going up. You're going to be like, shut the fuck up.
Then I'll shut up. I'll turn you off.
That's good. That's good. All right, boys, let's wrap it here. You good, Tom? James, anything you want to throw in here on the end? I think we're good for the first AI conversation.
I'm good.
I think we lost James.
James's AI is finished. He said AI.
Oh, God, he heard us. His computer heard us talking shit and was like, cut him out. All right, so we'll wrap it here. Tom, thank you, bro. James, we appreciate you as well. Yep, he just left the document too. So he must have, the robots must be attacking his house. So cool. Listen, thank you, everybody. We appreciate you. Make sure you're subscribed. We hope you enjoyed today's conversation. Drop a comment. Let us know what you think. We'll see you in the next one. We've got some good guests coming. Tom, I just locked up Jared Tendler, who wrote that book, The Trading Mind Game. So for the people listening all the way through, they just got a little hint that's coming. So stay tuned, everybody. A lot of fun stuff coming. We really appreciate it. Thanks. Have a good week.